Good afternoon. This is Rich Nelson with Allendale. Let's cover the wrap-up commodity comments here for Tuesday. This is December 13th of 2011 here. Obviously, all eyes are still on some outside market issues. It was interesting to see the U.S. dollar was only up a few points earlier on this morning. However, it rallied throughout the day. In fact, up 57 on the latest quote. This is actually the highest in the past few weeks or the past few days. We have had a strong rally in the U.S. dollar as we have some more concerns about whether or not this EU debt situation can be alleviated or not. We've got to make some very clear points here, guys. With this U.S. dollar rally, this is now the highest since October 4th. And keep in mind, that was the peak of that rally that happened from September into early October. That rally itself, to give you some perspective, gave us the highest U.S. dollar prices since January, earlier this year. So bottom line here is this U.S. dollar is retesting those highs right now, and that is kind of putting some pressure on grains. As far as corn, closing up a half-cent today, we must point out this was, kind of a good rejection off those early morning prices we saw after the pit open here. Soybeans didn't do too bad, up 6.5 cents, and wheat followed through as well, also up 8 1/4, and these are last trades here. Some key points we've got to make here. Obviously, this market is looking at South American weather, and it is an important issue here. Light dryness is still seen for Argentina. Light dryness is still seen for Brazil. We have to make some points here. Number one, yes, this is an issue for us, but really, is this actually too early for us to really be too concerned about? Keep in mind, these guys are actually just wrapping up planting in many areas. So we're not at the key pollination period for corn yet. We're not at the key blooming and pod fill points here yet for soybeans either. And here's some neat stats you guys should certainly keep in mind here regarding the South American situation here. This is actually more of a corn-related potential problem right now. And that's because for South America, corn pollination goes on between late December and the first half of January. So any problems with dryness actually could impact corn production more than soybeans. As far as soybeans, you don't get into that key pod fill and the blooming stages here. Those don't actually happen until later on, maybe last half January through February and such. So we got to make a point here, guys. This is actually more of a corn issue. It's maybe a little too early to be sharply concerned about soybean production down there just yet. So having made those points, we will have to recognize Oil World here today came out with a 73 million ton production number. That puts three groups now below USDA's latest 75 million ton estimate here for Brazilian soybean production. So that is slightly bullish there. We will make that point. Also of interest here, we've got NOPA, National Oilseed Producers Processors Association. This industry organization here in the U.S., they're talking of a 142 million bushel crush rate for the month of November. 142 million bushels, that's down about 4% from last year. So we now have crush numbers from NOPA for September, October, and this is going to be November. That'll be released here tomorrow. Each of these three numbers will be lower than where we need to meet USDA's hopes. Keep in mind, 4% lower for November. Well, geez, USDA is still trying to suggest that total crush for the year between September and August will only be down 1%. So bottom line, as far as soybeans, we're clearly going to miss this NOPA number. So that may also help us kind of constrain any rallies we might attempt here on the soybeans, at least for right now. As far as wheat, it was good to see the fact that wheat rallied a little bit here today in the face of Egypt buying all wheat from non-U.S. non-U.S. suppliers, and Yemen also bought wheat from non-U.S. suppliers as well. So, you know what, really grains didn't do too bad today, considering some of the news. Over on livestock, cattle today closed unchanged for that February contract. So we did have a good surprise yesterday with choice beef up $4. Today's midday beef report showed choice up 86 cents and select up 87 cents. So we are continuing with this trend of maybe these beef buyers are finally stepping back into this market here. Keep in mind, this is not going to stop us from going down in cash cattle. We still have some sharp mispricing relationships between wholesale beef and cash cattle. So we don't think this is a major buying reason yet here for cattle just yet. For livestock, for hogs, down 35 cents here today. One thing we noted in the past couple days on our research reports was the fact that recent short-term news coming out Friday and Monday actually was slightly supportive. However, perhaps it's only a short-term rebound. We've mentioned before that seasonally, this is a bear market for hogs from now until the end of the month. And today we see the Iowa-Minnesota cash hog run running actually down $1.01 compared to yesterday's quote. So it does look like maybe that seasonal trend of lower prices for cash hogs is going to now resume. Key thing for livestock, though, guys, keep in mind we have a full kill week this week, and then we have actually 2 straight weeks of holiday-related slaughter disruptions. So that is bearish on cash cattle and bearish on cash hogs because packers don't have the need to buy as much. Those plants will not be open. After the year ends, though, starting January 1, usually the trend for hogs is neutral to slightly supportive, and the trend for cattle is straight up going into spring. So keep that in mind here in the next few weeks. Key thing we're looking at here for tonight on the research product: what type of relationship is there between these commodity indices and each of the major grains and each of the livestock products? We have some discussion in there as well on the research product. Kind of neat charts we put in there, and certainly some great commentary. We strongly encourage you guys to get your subscription locked up here for Allendale's research products. That can be done on our website, which is allendale-inc.com, or give us a call here, 1-800-262-7538. This is Rich Nelson. Have a good trading day and a good trading week.